अस्सलाम वालेकुम। एडवांस कॉस्ट एंड मैनेजमेंट अकाउंटिंग। आज जिस टॉपिक को हम डिस्कस करेंगे वो है एक्टिविटी बेस्ड कॉस्टिंग। ये ज़रा नया कॉन्सेप्ट है और अभी तक जो ज़्यादा हम इस्तेमाल करते रहे हैं कॉन्सेप्ट कॉस्टिंग के हवाले से वो एक ट्रेडिशनल बेस्ड सिस्टम था। ट्रेडिशनल कॉस्टिंग सिस्टम में आपको अंदाज़ा होगा कि कॉस्ट को देखा जाता है, डायरेक्ट कॉस्ट क्या है, इनडायरेक्ट कॉस्ट क्या है और उनकी टोटल कॉस्ट क्या है। डायरेक्ट कॉस्ट में आमतौर पर डायरेक्ट लेबर और डायरेक्ट मटेरियल को काउंट किया जाता है। तो लिहाजा जो ट्रेडिशनल सिस्टम है उसमें आपके पास होगी डायरेक्ट लेबर, डायरेक्ट मटेरियल प्लस ओवरहेड्स। दिस विल गिव यू द प्रोडक्ट कॉस्ट। ओवरहेड्स will be all production related overheads. For ABC, which is activity based costing, we are going to examine the overheads in a slightly different manner. Usually direct costs will remain the same, so you will have direct material cost and direct labor cost. But where under the traditional system, overheads are normally used and an allocation basis is adopted to allocate the non-production overheads to the production departments to arrive at the cost of the production department, and then some basis of recovery of overheads is used, like machine hours, labor hours, things like that. And that allocation basis is used to allocate these indirect overheads to the production department. The second stage is that the production department cost is then allocated to the cost object, which might be the product, for example. Now, for activity-based costing, there is a difference in the allocation of these overheads. We do not use allocation basis such as machine hours or direct labor hours. Normally, there is a difference. What they do in activity-based costing is to look at the activities within the organization, and they allocate the cost to the activity, and that activity is then allocated to the cost object, which may be a product, on the basis of cost drivers. So there is a difference between the traditional system and the activity-based system. The proponents of this activity-based system argue that this more accurately allocates the overheads to the product because it is based on usage of services or usage of resources. Activity-based costing, or ABC as we'll call it, the measurement of indirect relevant cost. As we said, direct costs will be direct material and direct labor, and there will often be not much difference in the direct costs between the two costing systems. So the measurement of indirect relevant cost for decision making using activity-based costing techniques will be examined. An ABC system assigns overheads to each major activity rather than department. Normally, in the traditional system, costs are allocated to departments or cost centers. In this case, the costs will be assigned to each major activity. With ABC systems, many activity-based cost centers called activity cost pools are established, whereas with traditional systems, overheads are pooled by departments and described as cost centers. This is what the system will do. This system is going to divide the organization into activities, and it will accumulate cost of each activity, and then the activity cost will then be transferred to the product. This is the difference, and this is what the activity-based costing system is all about. Activities can be many different tasks and may include scheduling production, setting up machines, moving materials, purchasing materials, inspecting items, and processing supplier records. So it is important to see what activities might comprise. And of course, it is important to understand what activities are, what type of activities are going to be used. And we have said there could be things like production scheduling. Production scheduling often involves which product will be produced, over what period of time, and what quantities, and how to manage the entire requirement of production and make a production plan. This is the production scheduling. And then there is setting up machines. Setting up activity, this relates to when production is about to start. You need to perhaps clean your machines. Sometimes they need to be aligned. There has to be a particular setting for this particular product. Sometimes you will need to insert materials into the machines to start production. So this is all setup of machine. And when it is all set up, it is ready to go and start into production. So this is another activity which can be separately costed, how long it takes for the machine to be set up, and how many people and what material and things like that. So this is setup of machine. And then another activity can be, we have said, movement of material. Normally, your material will be stored in the warehouse, inventory warehouse. Each time you have a production run to carry out, you will bring material from the warehouse to the production floor, to where the machines are. This movement of material will normally occur every time you want to make a production of a particular product. So each time you will change and make a different product, you will have new material coming in from the warehouse to the factory floor. So movement of material is another activity which can be separately costed. These are examples of activities which can be established for our activity-based costing system. Normally, these activities will have to be established. The organization will need to set out what the activities are, and gradually they will then allocate costs to these activities and compile costs for the activities. We have said we are going to use cost drivers. The way in which to measure and the basis in which to measure activity and costs will be the selection of the cost driver. Production process activities include machining of products and assembling products. These activities of production will be the same under both the systems. Normally, we are looking at the allocation of overhead costs. So direct costs and production activities will be similar under both type of systems. Usually, production process activity cost centers are identical to cost centers used by the traditional systems. Overall, ABC systems will have a greater number of cost centers. So we have said, overall, there are likely to be a greater number of cost centers under the ABC system. We can divide the activity of the organization, and we can then allocate the costs to the activities. And normally, like you divide the organization into departments and into various cost centers, in this way you are going to divide the organization into activities. And chances are, and more often, it is likely that the number of activities under ABC is going to be greater. So once we divide this organization into activities and we start to accumulate costs, then by the use of cost drivers, we are going to allocate this cost of activity directly to the product. In the same way as under the traditional system, we take the overheads accumulated in departments and cost centers, and then some basis is used, for example, basis of allocation for recovery of overheads, which could be machine hours or direct labor hours. That basis is used to then allocate this cost of overheads onto the production departments, and from there on it is transferred to the product. Under ABC, the cost can go directly to the product, to the cost object. This is another argument that this makes the allocation more accurate under this ABC system. The second stage of allocation process allocates costs from cost centers pools to products or other cost objects. Instead of using the term overhead allocation rates or bases, the term cost drivers is used in ABC systems. Cost drivers provide the same kind of information and have the same purpose as the overhead rates. Basically, they are used for the allocation of these cost pools of activities to the cost objects. Direct labor hours and machine hours are used as allocation bases in traditional systems. Cost drivers include number of production runs for production scheduling and number of purchase orders for purchasing activity. So this is what we have said. Now under ABC, activity based, we are going to use cost drivers. So cost accumulated in pools of activity, and then the cost drivers to allocate them to the cost object or the product. The cost driver will have to be selected by the organization in the same way as you select the overhead recovery rate basis. These were, we said, machine hours or direct labor hours. Whatever was considered more appropriate, the organization uses that as a basis for allocating the costs. Under the activity based, we have called these cost drivers, and just to explain, an example of cost driver would be for production scheduling. What would be the cost driver for production scheduling? It could be the number of production runs. This cost driver, therefore, is going to be the most appropriate activity. It's going to be the most appropriate means of measuring the cost of this activity. Production scheduling, we said, was one activity. Every time you are going to do a production run, you will need to have scheduled the production. So production run can be an example of a cost driver for production scheduling. We said another example of activity was setting up machines. Setting up machines, the cost driver to use to measure this activity can be the setup hours. So the setup hours can measure the setting up of machines, and another activity can be purchasing. Purchasing is an activity, and the way to measure the cost of purchasing would be to use number of purchase orders as the cost driver. Hence, we are going to have the activities, and we are then going to find the suitable driver for these activities. And the drivers will become the basis and provide the rate at which cost can be charged to the product itself. Traditional systems allocate service department costs to production centers and thus included in the production center overhead rates. When you calculate the overhead rate, it already incorporates within the production department cost the cost of the service department. In contrast, ABC systems establish separate cost driver rates for service departments and assign activities directly to cost objects without any reallocation to production centers. So this is what we have said, that the traditional system is going to allocate production center to the production center the service department cost. This is the process. Different types of methods are used and some basis and calculation is done to first of all allocate the cost of the service department to the production department, and from the production department it is then allocated to the product. We have said that this will not be necessary under the ABC. In ABC we are able to directly allocate the service department cost with the help of the cost driver to the cost object or the product. This is another aspect that makes this ABC system more accurate. By using greater number of cost centers and different types of cost drivers and assigning activity costs to cost objects on the basis of cost driver usage, ABC systems can more accurately measure the resources consumed by cost objects. Hence, this is what we are saying, that under ABC we are using different types of cost drivers and we are assigning the activity cost of the object and we are assigning the activity cost direct to the object using these cost drivers as the basis. And so we say that ABC is going to more accurately measure the resource consumed. This is where the crux of the difference lies, that our allocation basis used in the traditional system, that basis is not direct. Very often there have to be bases which are approximations, which are estimates. So the object of the costing exercise is to allocate the resources that have been consumed to the product. By looking at the activities and the cost related to the activities and directly allocating these to the product, the resources consumed by the product are more accurately identified and measured. We will use an example to illustrate the difference between the traditional system and the activity-based system. The example of general enterprises, and let's look first at the traditional system. The annual overhead cost for general enterprises, which has 3 production centers, 2 machine centers and 1 assembly center, and 2 service centers, the materials procurement department and the general factory support department. The overheads are as follows. Indirect wages and supervision. As you can see from the slide, that this overhead of indirect wages and supervision has already been allocated to all the 5 different departments. One is the machine center X, the cost is 1 million. Machine center Y, the cost is also 1 million. The assembly section, the cost is 1.5 million. And the 2 service departments, materials procurement 1.1 million and general factory support 1480. The total of this overhead is 6,080,000 and it has been, as we said, allocated to the 5 departments. The next overhead is indirect materials, and this has also been allocated to all the 5 cost centers. The 3 production cost centers, machine center X 500,000, machine center Y 805,000 and the assembly section 105,000. The 2 remaining service departments, materials procurement has no indirect material cost, and general factory support has 10,000. So this total overhead of 1,420,000 of indirect materials has been allocated to the 5 cost centers. Other costs identified are lighting and heating 500,000, property taxes 1 million, insurance of machinery 150,000, depreciation of machinery 1.5 million, insurance of buildings 250,000, salaries of works management 800,000. All these other overheads together sum up to 4.2 million, and the total overhead being shown here is 11.7 million. So here we have the example of a company called General Enterprises. It has 2 machining departments and 1 assembly department. These form the 3 production departments, and there are 2 service departments, the procurement and the general support. These are the 5 departments. We have seen various overheads being allocated to these departments. We have seen the indirect labor cost, supervision, and indirect wages. This cost had been allocated to all the 5 departments. And we have seen the indirect materials cost. This cost was also allocated to all the 5 departments. The total of the overheads, as we saw, was 11.7 million, and the other costs had not been as yet allocated to the various departments, these 5 cost centers. So under the traditional system, the next step would be to take all the other costs that have been highlighted, which included property taxes, depreciation, insurance, things of that nature. All those costs should now first be allocated to the 5 cost centers. And we see that in the next slide. The indirect wages and indirect materials are shown as had been allocated previously. Lighting and heating has now also been allocated to the 5 cost centers. Normally, you will adopt a basis for allocating this expense. Lighting and heating usually is allocated on the basis of the cubic square foot of the areas being used. Property taxes have been allocated. This can be allocated on the basis of area. Insurance of machinery is allocated to all the departments, normally on the book value of the machinery in each department. Depreciation of machinery is also allocated on the basis of book values of machineries within the various departments. Insurance of building, the basis here normally can be the area covered, and salaries of works management can be allocated on the basis of number of employees within each department. This is the normal next step for the traditional costing system. The overheads, those that can be directly allocated, were already allocated, the indirect wages and indirect materials, and the other overheads using some basis have been allocated to the various cost centers or production departments and service departments. The thing then to do is use this overhead of the service departments and find an appropriate method, the most suitable method to allocate the service department cost to the production department cost. The tradition system uses this method of accumulating all overhead costs into production departments first, and then finding a basis to establish an overhead rate. So various methods are used to allocate this service department cost. I'm sure you've covered them in your past studies. There is also an algebraic method. There is one repeated method basis. So some kind of basis will be used to transfer or allocate this service cost to the production cost. Let's look at the next slide to see how this was done in this case. The top line shows the total overheads on the previous slide, the total of 11.7 million overheads for each of the 5 different departments. And after that, a reallocation of service center costs has been carried out. So the 1760 cost of the material procurement department, using value of material issued as a basis for allocation, has been allocated to the 3 production departments: machine X 880, machine Y 660, assembly 220. This 1760 has been allocated to the production departments. Similarly, the general factory support cost of 1.8 million has been allocated to the production departments on the basis of direct labor hours. The bases have to be adopted by the organization, whichever is the most suitable basis. And on this basis, then, we have transferred the entire overhead cost into the production departments. So the 11.7 million of overheads now has been allocated as 4.3 to machine X department, 3.8 to machine Y, and 3.6 to the assembly department. And then, using as a basis machine hours in case of machine X and Y, there are 2000 hours. This will be information which is given: 2000 hours of machine X and 1000 hours of machine Y. And dividing the total overheads by the basis, which is the number of hours, we have established the overhead rate of 2.15 for machine X, 3.8 for machine Y. And for the assembly department, direct labor hours have been used as a basis: 3.6 million overhead and 2 million hours have been used to give an overhead rate of 1.8. That's the basis to be used, and that's how costs are, first of all, allocated to all the departments, and then the service department costs, by using some appropriate basis, are transferred to the production departments. Seeing the total overhead and seeing the total number of hours, if you are using hours as the basis, you can establish the overhead recovery rate. As we did in this case, in the last case, our overhead recovery rate was 2.15 for machine X, 3.8 for machine Y, and 1.8 for the assembly section. We shall compute the manufacturing costs of 2 products. Product A is a low sale volume product with direct costs of rupees 100. It is manufactured in batches of 100 units, and each unit carries 5 hours in machine center A, 10 hours in machine center B, and 10 hours in the assembly center. Now we are going to use this overhead rate to establish the cost of 2 products that are being manufactured in the organization. Product A is one which we are going to measure. We have been given information related to product A. The direct costs are rupees 100. It takes 5 hours of machine X, 10 hours of machine Y, and 10 hours of the assembly section. This is the way in which overhead costs will be transferred to the products. We have the organization, the cost centers, the 5 cost centers, the total overheads. Overheads have been allocated to the production departments. A rate has been established, and now the overhead rate is going to be used to arrive at the product cost of two products, product A and product B. Product B is a high sales volume product and is manufactured in batches of 200 units. Each unit requires 10 hours in machine center X and 20 hours in machine center Y and 20 hours in the assembly center. Direct costs of 200 have been assigned to the product. Calculations of the manufacturing costs assigned to the product are as follows. We are now going to see how to calculate using the overhead recovery rate established in the previous slide. This overhead recovery rate can be used now to find out the per unit cost of product A and product B. A, we said, is produced in 100 unit batches. The direct costs are rupees 100 per unit, and it requires 5 hours of machine X, 10 hours of Y, and 10 hours of assembly time. And similarly, information we have been given on product B. Product B produced has direct cost of rupees 200, produced in units of 200 each, 10 hours in machine X, 20 in Y, and 20 of assembly section. Let's now see how to arrive at the cost of each of these products. Product A, direct costs we were told was 100 per unit. So for 100 units, it is 10,000. Overhead allocation in machine X, we had 5 hours. And the overhead recovery rate, if you remember, as calculated earlier, was rupees 2.15 for machine center X. So 100 units requiring 5 hours per unit and overhead rate of 2.15 gives 1075 as the overhead allocation cost to product A from machine center X. Similarly, in machine center Y, these 100 units require 10 machine hours, and the rate of overhead recovery in Y was 3.8. So product A cost for machine center Y will be 3.8 million. And in the assembly section, you have 100 units which require 10 direct labor hours, and the recovery rate was 1.8 per unit. So the overhead costs here are 1,800. The total cost of product A now can be seen as 16,675, and therefore this is the cost of 100 units. To calculate the cost per unit, we divide the 16,675 by 100. This gives the product cost of 166.75 for product A. This is the normal basis of computing the cost of a product. You have the direct cost and you have the allocated overhead cost. We have calculated the overhead rates for each of the three production departments, X, Y, and assembly. And using these rates, we were able to allocate the cost of overhead to product A. So product A had 10,000 as cost, direct cost, and it had 6,675 as overhead, total overhead cost allocated to it. And so this is how we get to the per unit cost of product A, which is 166.75. Now we can see in a similar way the cost computation for product B. Product B, direct costs of rupees 200 per unit and batches of 200 units each will give direct cost of 40,000. The overheads allocated, if you remember, for product B, it was 10 hours in machine center X, 20 hours in machine center Y, and 20 hours in the assembly section. So 200 units at 10 hours, the rate was 2.15, amounts to 4,300. For machine center Y, the 200 into 20 hours at the rate of 380, 15,200. And similarly, in the assembly section, the 200 units of 20 hours, the rate is 1.8, gives 7,200. The total cost allocated to product B is 66,700. 66,700 is the cost for 200 units. Dividing that by 200 gives you the per unit cost of 333.5. This is how the traditional system is going to allocate the costs to the products. So now we have a per unit cost for product A and we have a per unit cost for product B. We can now compare this and see what would happen if we were going to use the activity-based costing system. And we would allocate these costs, overhead costs, to the products A and B under the activity-based costing system. Here, the method used would be first to identify the activities, then to identify and allocate a cost driver, then to measure the cost driver and the cost of the activity to establish a rate for the cost driver. Let's look at the next slide. In this slide, we can see that the total of the overhead cost of 11.7 million has been divided into various activities, starting from the production activities. And we have said before that production activity and direct cost activity is going to be the same under both the systems. So there will be no difference in identifying the activity relating to production. Here, the activities of machine center X and Y have been used, and the assembly. And for the overheads, the various activities identified are materials procurement, and that has several components: the purchasing component, receiving component, and the dispersed materials component. And the general support activities have been identified as production scheduling, setup machines, quality inspection. These three activities have then had the costs allocated to them, and the costs in the purchasing component is 960, receiving is 600,000, and dispersing material is 200,000. For each of this activity, a cost driver has been allocated. So for purchasing component, the cost driver is purchase orders, and therefore 960,000 is the cost allocated to purchasing activity. There are 10,000 purchase orders, therefore the cost driver rate is 96. So under this system, you will have the activities, you identify a cost driver, and then you establish a cost driver rate. The other activities identified, such as receiving components, the 600,000 is the cost. For receiving material receipts has been given as a cost driver. So you can see that cost driver is the thing that is most likely going to cause the changes in cost. So in receiving material component, the costs really will vary according to the number of material receipts. Here the receipts are 5,000 and the rate established is 120. For dispersing of materials, the materials are usually dispersed to production. The 200,000 cost allocated to this activity is going to have as a cost driver the production runs. Every time there's a different production run, you need to transfer material or disperse material to the production department. The quantity of production runs is 2,000. So this gives the cost driver rate for dispersing of materials as 100. General support activities, production scheduling is one activity. 1 million is the cost, and the cost driver for production scheduling is also production runs. 2,000 was the quantity of production runs, so the rate established for production scheduling cost driver is 500. Setup of machines 600,000. Cost driver is setup hours. There are 12,000 hours, giving the cost driver rate of 50 per setup hour. Quality and inspection activity, the cost is 200,000. Here cost driver used is items inspected, and there are 1,000 items that have been inspected, so this gives a cost driver rate of 200. Hence the total of 11.7 million has been used to provide the cost driver rates to arrive at the cost driver rate under the activity-based costing system. So this is how activity-based costing is going to use the overheads and allocate and have some cost driver, and on that basis establish a cost driver rate. We have said that the activities would be greater than the traditional system, and also the allocation of overhead costs using these activities will more closely reflect the amount of resources consumed by the products. We have seen, therefore, that there were activities like the production scheduling, and we set up production runs as the cost driver, looking at the total overhead cost in production scheduling, and looking at the number of production runs gave us the cost driver rate, and so on along for all the other activities to provide a cost driver rate. Now what should happen is that this cost driver rate is going to be used for the products, seeing the amount of and the quantity of these cost drivers consumed by each product, and using the rate we can allocate the overhead cost directly to the product. Let's see this in the next slide. Here we have shown the various activities on the left hand side, then the cost driver that has just been calculated for each of the activity, and looking at the quantity used by 100 units of product A and the quantity used by 200 units of product B to arrive at the cost allocated to A and the cost allocated to B. In the case of machine X, the cost driver rate we established was 1.485. 5 hours were used by product A, so for 100 units the quantity of hours used is 500, and the cost allocated to A is 500 multiplied by 1.485, which is 743. In a similar way, the quantity of machine hours used by 200 units of B is 2,000 hours. We said each unit is going to consume in product B of machine A each unit is going to consume 10 hours, and so 200 hours will give 2000 hours, and that multiplied by the rate of 1.485 gives the cost of 2970 allocated to B. Similarly, for machine Y and assembly and for all the other overhead which has been allocated to the activities, such as purchasing components, 96 was the rate of the cost driver. There is one purchase order for 100 units of A, one purchase order for 200 units of B, and therefore the cost of purchasing allocated to A and B is 96 each. And receiving components is 120 each, and so on. All the other various costs have been allocated until the total overhead cost allocated to A is 10,589 and allocated to B is 20,206. We know the units produced are 100 for A and 200 for B. The overhead cost per unit can now be calculated. Dividing the 10,589 by 100 approximately gives 106, and the 20,206 dividing by 200 gives approximately 101. We also know direct costs per unit were 100 and 200, so this gives the total cost per unit as 206 and 301. So now we have seen how the total overhead cost was divided into various activities, and then by using a cost driver rate, this overhead cost was transferred to products A and B. Let us now compare how the costs have been arrived at and what is the difference in looking at under the traditional system and under ABC, what would be the difference in the cost of the product. We can see here the traditional and the ABC, both systems have been shown separately. Product A, the cost under traditional would be 167. Under ABC, it is 206. Product B, under traditional would have been 334. And under ABC, it is 301. Compared with ABC, the traditional system undercosts product A and overcosts product B, meaning the cost of product A appears to be understated and the cost of product B seems to be overstated. 167 compared to 206, this is understated, and 334 compared to 301, this is overstated. Allocating costs on the basis of machine hours or direct labor hours, the traditional system incorrectly assumes these are the cause of costs of the support activities. Product B consumes twice as many machine hours and direct labor hours as product A. Therefore, the traditional system allocates twice the amount of support cost to B. Here we have seen, comparing the two methods, comparing the two systems, we found that product A and product B, there was a difference in the costing, and the basis of allocation, when you change to ABC, it provides a different cost, and therefore it is a more accurate cost. That's all for today. Thank you very much.